Hello everybody, welcome to Ask Svet About Crypto channel, and today we have an unusual type of interview. So we won't be doing any coin review. Instead, we're going to talk about the article which I published in Medium. And Chris Gaines, he's going to be asking me his questions which he got after reading this article. This article is very short and it concerns or touch the very important topic of institutional investors coming into the crypto. Shall we begin?
Let's do it. Yeah.
Okay.
So I read the article and the title is Blockchain for Entrepreneurs or Institutional Investors Keep Coming. And so going through this, essentially your main argument is that there's a difference between investment in just blockchain projects and actual cryptocurrencies, and you believe that people are or institutional investors are going to be looking at cryptocurrencies in their portfolios, right?
That's right. So, however, it's not my belief, it's my arguments.
Yeah.
So, as a fundamental analyst, I analyze the fundamental situation on the blockchain cryptocurrency market. So, I pose my opinions on numbers, and I see that numbers start to change. And that's the basis of my analysis. So it's not like opinionated article. It's more like present my readers with conclusions which I draw from numbers.
From the numbers, cool.
But you write in the first assessment that there is different types of investment for institutional investors. Most, if not all, of the investments from institutional investors until most recently were in blockchain projects. So everybody understands the difference because you can buy portion in the blockchain projects, become the private equity or startup or angel investor.
It's similar to like the traditional system.
Similar as without even touching cryptocurrencies.
Exactly. Yeah.
Moreover, you will avoid cryptocurrency as much as you can because, of course, legally is a very murky water. Nobody really know how to deal it in the tax level, on the reporting level, not to mention all of this QIC and AML, etc. So until recently, most investors, they just avoided it. And I'm talking about institutional investors. However, I make three arguments why it might be changing. Moreover, why it will inevitably change. So this article about fundamental changes, not about changes in the nearest month. It can take years or even decades before it comes to that.
Yeah. Okay. I mean, so going through it, your first argument was basically that we've seen in the past 20 years, which I would like you to describe some of the other situations in the past 20 years, but you say that there's been an unprecedented surge of speculative derivatives and then decoupling from market fundamentals. So, and you're basically saying that we're not pursuing value anymore, but pursuing trends, like looking past, as Warren Buffett typically looks at, like what is actually the value being created, and just looking past where's the trend going. So what are these some of these other situations that you've seen in the past 20 years of this type of thing happening?
By the way, thank you for mentioning Warren Buffett. That's exactly the type of investors I want you to think about when I talk about the value. Right, Warren Buffett is traditional value investors, and I think in my argument is that the days of such investors are counted because of their arguments, and one of them is we have increased decoupling between what we call assets and the instruments. And the most obvious was, of course, 2008. All of these mortgages, it was the derivatives.
Okay.
And what happened in 2008, I don't want to repeat all the story, everybody knows, everybody became a victim of that, but the story was that the value of all the mortgage instrument, which basically derivatives from the real value of the assets, underlying assets, what you have people in your houses, in your lands, was so much apart.
Yeah.
Then when it comes, you people paying your percentage, it was unbearable because the amount of accumulated debt is so much, it becomes so much different, so much bigger than the value of the underlying assets that it becomes unsustainable. However, many people thought it was just an episode, and 2008 was 10 years ago. But what happened is that during this decade, situation even become worse. Despite all the measurement, or despite all of its legislation initiatives, despite all of the law, most of the assets which we know now trading so much higher of their perceived value. It's not even 10x now. You know, 10x is usually, average traditional indicator on the traditional Wall Street type of platforms, say Nasdaq, right? So you taking the yearly earning of the company a year, and you 10x it, and that's approximately what you can expect the company's capitalization must be. Now it's at 20, 25, 30x.
You look at over the past 20 years, some of the different unicorn startups that have come out. That's 100%. That's something like a statistical thing you can see is they're no longer able to use that finite like 10x of profits.
You've taken my word from my mouth, because that's exactly what I'm intended to talk about. Unicorns, 300 of them. 300. Each unicorn valuation is more than $1 billion. My question for you. And for you, when the last time you guys seen the report, financial report, accounting report in general accepted accounting principles or international accounting principles from Magic Leap? You know Magic Leap, right? Magic Leap is the company who promised all of us to have this 3D, virtual reality, augmented, whatever they call it. You probably remember in 2014, 2015, a lot of small trailers in YouTube where we saw these elephants growing through on palm of our hands. You remember that one?
Okay, yeah.
That was a Magic Leap.
Yeah.
So that company is nobody really know what they're doing, let alone we see any of their accounting. And most of this, that's a unicorn, and they are invested more than $40 billion, and that's growing every day. We can check, I can name others, there are more than 300 of them. Point being, we already in a different types of game.
That's a really good point in that
price of the assets and their valuation becomes so decoupled that it's not possible to bring it back. Of course, they're going to be some, for example, Uber tried to be public, right?
Yeah.
Some other company go to IPO. So the game in this venture capital industry is pretty traditional, right? You invest some money, you wait some period, you go IPO, you cash out, company become public, and you live happily ever after, like Facebook, right?
Yeah.
But those days are gone. And that's my point. Those days are gone because people want to return on their investments exceeding previously acceptable. Because before that 20-30% per year was, that's a success. That's a success for venture capital. Of course, in a 10-year period, right? Now, that's an average. We want more. And that's why all these instruments come to play. Even in our like a venture or angel industry, what we have a safes. We have now other type of agreements which you kind of sign with these companies which don't have anything, and that's already priced on top of them. Silicon Valley, I hardly can remember a startup with a valuation less than $2 million. 2 guys and a dog, it's $3 million, right? Because we have a dog, right? Maybe a dog. Anyway, that's my argument.
All right. Well, the second point that you make, essentially, the way that we were looking at the post-Cold War monetary system, that's what you're talking about. It's supposed to be open, global, and led by the USD. Is being essentially kind of taken apart by politicians. So you're saying that some of the key regulators have fallen to political pressure, and they don't necessarily follow economic theories anymore. They're more following the politics of it.
I think actually it's one of the most obvious arguments. That's one which we can feel on our own experiences, life experiences, on our own wallets, on our own economic lives, social lives. But of course, there are like a lot of economics behind that, a lot of statistics behind it. I don't want to really get into the numbers. It's not time and place.
I guess the question is, what's the situation that backs this idea?
Okay, so let's say we have more or less 3 defined periods after the World War II. So the first period, it was like a reconstruction period when all the countries was, except United States of America, was absolutely down economically. Everywhere where you can see. Of course, I'm not even talking about Germany or Japan, who was completely destroyed because of their participation on the wrong side of the war. Yes, of course, we have Russia, who was completely divided. Whole Europe was in ruins. England was in debt for United States, and that period, post-war reconstruction, took approximately 20 years, more or less until the beginning of the 60s, when, thanks to the large investments, Marshall Plan of the United States, thanks to the new legislation which allow like a free entrepreneurship in the Europe, and thanks to the industrial policies, industrial economic policies in the centralized or totalitarian governments or socialist governments which invested heavily, like in Stalinist Soviet Union and Mao Zedong China, we have this post-war 20-year growth.
Yeah.
So that's the first period. Second period was when that growth come to end, and that's a period where more monetarist policies came to play, like famous Friedman, G. Friedman came to his theory, which was accepted first, of course, it was like an intermediary period. It was, of course, like Carter administration, but more or less it was embraced by the Reagan and by the Thatcher administration in Britain.
Okay.
And from those two centers, these politics spread across the world. But of course, we have the Soviet Union, who still stayed pretty much inside of his close-minded, socialist politics, and then we have China. And that's the second period. And the third period happened after the, of course, break of or collapse of the Berlin Wall. I don't want to get to the pros and cons and everything. I'm just saying that there's 3 periods. And that 3 periods is the beginning of so-called new Keynesian politics. So the first politics was more or less, 3 periods. First politics, it's a centralized economy. Pretty much government from the top is in America or in Soviet Union or Britain, because it's post-war reconstruction and it's pretty much Truman era, and which is mostly based on the Eisenhower era, which is mostly based on the investment in the economy. And it's a tremendous growth, but it's centralized.
Yeah.
Second year, it's a free market economy. It's Reagan era. It's government is pretty much trying to sell their assets, like in Great Britain. They are privatized all their railroads.
So
and everything. Same happened here. For all airlines are privatized, etc. And the third period is new Keynesian economy. Basically, what Keynesians did, they tried to combine two.
So investment side
and yes, free economy and little. It's super complicated, right? We don't have time to that, but more or less just to make it's very, very sketchy and illustrative.
Yeah.
So there is this 3 period. New Keynesians saying that the economy is now global. Let's let corporations do whatever practically they want, but we will control very closely monetary sphere. We will control it centrally from mostly Federal Reserve System and European Central Bank, and then we pretty much control political side. We pretty much control all these law and regulations, because law and regulations and standards always done by government. Yeah. So they keep control for 2 of that. They pretty much limited corporations, freedom in terms of managing labor, product standards, freedom of movement, freedom of everything. And that's a more or less new Keynesian model without too much. My point is that's the end of the story for new Keynesian's
Do you
model.
think that's over?
That's over. Not because it's bad, but
Just
because
based on the trends, what's
there
happening?
is no fundamentals to support that, because our world is now global as like enough. So now it's different type of tendencies.
Yeah.
People, so everything just a little bit moving backward, right? People.
It
Go-
seems like
go on, yeah.
the lines are blurring between where these regulators want to be, like the way that they've been doing things, and the way technology is allowing people, investors, companies, everyone to do their business nowadays.
Exactly.
Right.
And that's one point. The second, the underlying point is that centrally managed financial system cannot sustain itself, cannot guarantee the stability
That
of,
they used to be.
of the economical layers underneath. Because, well, again, because most of the money now kind of going round and round on top of the pyramid, they are not tickling, spreading to the lower layers, right? Because the famous expansion contraction credit cycles tells us that Federal Reserve System start to either buying securities or selling them, increasing or decreasing M1, M2, and M3,
Yeah.
which is basically measurements for like figuring out how much money we have, to be very, very like straightforward, okay? And that's M2, M1, M2, and M3, that's what we got, right?
Yeah.
So we're supposed to have more money because corporations supposed to pay us more. That system, that's a contraction and expansion credit system, right? Because banks have multiplicators, and when Fed started to ease their monetary policy, banks has lesser percentage and can credit more enterprises. But what happened during the last decade? Have anybody received more credit from the banks? We don't. Nobody didn't. Because banks, they do not finance small business anymore. They do not finance even medium business because it's too risky. They start to finance all the corporations, which means all new Keynesian theory lose the ground. Usually, the Keynesian theory, new Keynesian is about money trickling down, trickling, right? There are a lot of money on top, but we have like a rain of these small coins going, and we're supposed to have like a better life. But what happened in 2 decades? Nothing changed, except a lot of money on top, except overblown valuation of all the companies, and as a result, beneficiary of such a type of politics, only limited number of people, and not only in America, all across the world. System is broken. There are many different arguments why it happened. Some say that we can cure that system, but by maybe kind of adjusting some of the cleaning up some of these channels between there's big bag of money and us, but I'm sure it won't work. My personal position is that it is because of the over centralization, but that's a different story. We can talk about that later. My second argument is that now it's time for that system to be changed.
To switch up.
And the way to change the system is to change the value system for us. And it means that digital money became something which we call, some people call like monetary easing for populace. So we issuing our own money because we don't have any other sources of money because those guys took everything.
It's like you're calling it a paradigm shift.
Yes,
like,
paradigm shift. Okay.
That makes sense.
Did I make it?
There's a lot of information, but yeah.
Okay,
overall,
I hope people will get through that information.
Overall, I see where you're coming from. the third point that you made, essentially you're just stating that we're entering a new digital gilded age, where people are discovering that computers are essentially becoming a much more integrated part of everything that we do, right? And just as what happened in the 1920s, 1930s with the rise of the technology of the time, radio, TV, media, all the things around there, you're stating that we're having a new shift today, and we're going to have a somewhat similar change in the way that people do things. So, I mean, I kind of agree with that. I guess the question is, what exactly is the advent of computers and the way that they're being utilized? How is that sucking in more and more of their time and money?
Do you know, I know, you're supposed to know what Gilded Age is, right? So what it is?
Gilded Age is what you were describing, right?
No, I mean historically. Because Gilded Age is a historical kind of definition of the period between the end of the American Revolution to the beginning of the World War One.
Yeah.
So it includes a very large period of time when America became the leader of the world in technologies.
So it includes Industrial Revolution.
It includes Industrial Revolution and includes also the Information Revolution.
Yeah.
Because why I'm talking about this radio, television, and cinematography, that was the first mediums of dispersing information to the public. That was the first wave, well, maybe not the first wave, but one of the wave of the information revolution.
Exponential growth in how much in the type of information that can be put out. Yeah.
The point is that was one of the first steps for us becoming digital entities. You see what I'm saying? It's not simply we developed Hollywood and Gollywood started to sell movies all across the world, including in India, and India just got into the train and created Bollywood and so on and so forth. It's a point that at that period of time, people started to value something else except what they used to value, right? So before that, people thinking, okay, I got a horse, or I got a house, and I got Colt in my in my holster, and that's things, right? That's something which I can pay my hard-earned dollars for, right? And then we got a railroad. You can touch this railroad, right? You can sit on this railroad. You can go fast and gets you from East Coast to the West Coast or back just in a month, and that's perfect.
That was the most exciting
No, that's the
thing.
value.
Yeah.
But what happened during the Gilded Age? New concept came into the play. Patents. Remember that, right?
Property.
Of course. Who invented the electric bulb?
Edison.
Exactly. He was the founder of the system of the patent. Intellectual property became a value.
Yep.
Huge value.
Value for an idea.
People started to learn how to pay for that. Before that, it was you have an idea how, I don't know, how you, I understand that patents were introduced before Gilded Age a little bit, but in Gilded Age,
they took off.
They took off and become universal value. Everybody understood that. Because before that, of course, it was a Colt patented his invention and many other did, but it was a local small things. After that, it became part of the mentality. People started to think about value, not only a thing you can touch, but a thing you cannot touch. Something in your head. And that's a huge shift in paradigm. And that's what will happen in the nearest 50 years. That is my argument. So now we have, I don't know, we already spent at least half of our working days in a computer. I do that not because I probably prefer to go to swim, but it's just because it's more entertaining and more productive.
And entertainment,
of course, it's more productive. I can contact thousands of people every day now, thousands. Even 5-6 years ago, I can do maybe 10 if I call by phone. It's just a simple example. And that goes for everybody and everywhere. And of course, the instruments or the new environment, I wouldn't call it even instruments because It's environment. We created the digital world, and we have the whole objects in it.
Digital assets.
Digital assets. It's not only you take your home and you digitalize it because you have a property right which you can put in a blockchain, and then legal kind of team goes there, check it out, and sell your home, right? It's because we can already build a home in the digital world. Not that everybody now accept it as a value.
But someone does. And there can
Not
be
someone, but a new generation of people who spending like maybe 30% of all their time playing that.
Yeah.
Think about these assets in the digital games. Of course, for the people of the older generation, it's just a job. Who gonna be paying $100,000 for cosmic ship there?
But the value that they might have derived from buying a new horse way back in the day could be the same value that someone perceives.
More than that, because your horse is gonna be dead in 25 years. Your house will stay forever. You build one digital house and it stays forever. It sounds like a funny what are you talking about? Like Charlie Munger. Let's explain to Charlie Munger that this house in the internet can cost like $1 million. Charlie Munger will be enriched. Warren Buffett told you that's
You said invest in property, right? So
you young man, you doing something wrong. You should you go to jail for that. But come on, that's old people, old ways. It's the same like in the Gilded Ages. We have these old cowboys who was thinking about wealth in the terms of stock they have, right? Like a cows. They have like 1,000 cows. He's a rich man. But somebody who like was I was like owing a patent for the bulb. What this guy is doing, right? They don't understand what he's doing, but he just become one of the wealthiest person in the world just in 10 years. That's the future, and that's my argument. We have this shift in the paradigm, how we think about the value, and this value now shifting into the digital world. Not because it's good, not because it's one way,
because it's where we spend all our time.
But we have to do that. As soon as we shift our time and our attention, money will follow. And institutional investor will follow money. And that's conclude my 3 arguments.
No, you make good points. The shift into the digital age, taking stuff that exists, the way that we currently do things, shifting into this new age. It makes sense. Like all the stuff that we talk about with VR, with digital property, more and more of all of that interaction and that value is happening in the digital space alone and decoupling from its physical attachments.
And moreover, I think we are now in a very, very early age. Even the early adopters of this digital money, we really don't understand the real value of this one. We just kind of feeling our ways.
The potential is there.
We just only believe, but we don't know. We don't really know what it means, right?
And how it's going to end.
Yes, owing some numbers in the servers which you never seen in your life. Does it mean anything to you? I think on a psychological level, still not. Still, we think about that like more of the game, like a funny way of changing the. I don't know, maybe our perceptions, right? So you build some castle in this virtual world and you attack another castle's latest game, which is Tron, I think now, I'm proud of, because Justin Sun was just talking about that on a consensus about that new game where you can build castles and then attack other castles and take the money from it. Just like you understand, right?
Yeah.
You keep your hard-earned Theory X, and then somebody when you are not home, and they can just take your wealth. Now you value a castle.
That's adding value to these games that people used to play on the board.
No, it's a value for your castle.
Yeah,
because there's a castle which got your money, and you didn't just actually care about how high the walls in your castle is. You see the point?
You created Yeah.
You have to build it.
Yeah.
You have to spend your time, and the value of your castles increase. So that's how it works.
That makes sense to me.
Okay, I think we are pretty much covered everything, and it's already maybe too long the video, but again, I'm just trying to build a channel which you guys will like, and if you like it, smash the like underneath it. Send me your comments, subscribe, please. I have still like a 17 of subscribers. That's not good.
It's progress.
It's progress, but I'm not really promoting this channel. I'm just sending that video to the people I know, to the people which know me, and just trying feeling my way in this new digital age. Thank you again. Here was Svet Sedov with you. Subscribe to my channels. Ask Svet about crypto. There are much more subscribers there. And I think my friend Chris Gaines, he's a co-owner of the perfect place for you to educate yourself about blockchain, about these new digital beautiful things. Come to them, ask them questions. They're pretty much the first, actually not pretty much, they are the first educational center in the Silicon Bay area. Because we have another one, which is Starfish in San Francisco, but they are only one here.
Well, and we're working directly with Starfish, so
Yeah,
just
check
check
same crowd.
check us
same
out
people.
at www.theden.io, and then you'll see all the cool stuff that we have going on. So,
See you.
Yeah.
Thank you.
Thanks.
Bye bye.